Hello everyone, I'm Mark Sane and welcome to Sane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 4 of the Forex market review, the 4th week for 2017. We're currently in January and I hope your trading has been successful. If it hasn't, don't be alarmed. A lot of people out there haven't been successful. January has been very unpredictable, going up and down so quickly it's just hard to take a trend. However, I've been fortunate enough, some of my trades have delivered. So we're going to take a look at one of those, one that hasn't, and some future trades coming up. So let's jump straight to those charts. So here we are looking at the pound USD. This is one of our successful trades we were mentioning last week to take if it met your rules and it meets your criteria. So please seek any professional advice that you need before taking these trades. These are all general advice only. Well, what we had this move here. It came down and we're looking for another push back up higher. We jump down to our 4-hour charts, and first thing we want to identify is our lower low in price with our lower AO. So what we see this price has stepped down and this AO has stepped down. But if you're familiar with the way we trade, if I zoom in a little bit, you can see it just didn't come back to the zero line. It was very close, but just not enough to confirm a clear AO divergence. But that's fine. Back on the daily chart, we also had a lower low in price with our higher AO. So that was a good indicator to go down. So this was, I'll just show it was a lower low there. And you've got the stochastic moving up, advising that the trend is looking at continuing higher. We then jump down to the 1-hour chart and we look for our entry position. And what we're looking for, if I use the same points here, we're looking for the lower low and the higher AO. So that was a higher AO, and this is the lower low in price. We then wanted to see it come back, test the 200 EMA line on the 1-hour chart, which it did. Had to pull back to a minimum of 38.2. So if we look at our wave 3, so this is 1, down for 2, up for 3. We know this is wave 3 because we look for the first large AO. When it comes back to zero line, we find the lowest point, and then we look at pushing higher. So if we're looking at our risk to reward, and say you looked at getting in somewhere around here or here, you're probably looking at a maybe 125 pip stop loss, and you've easily coming up to making at least 1 for 2 to these levels up here. Some of you would have had a tight stop loss of probably about 100 pips, and you definitely made that. Where we're looking it to go if you're still currently in the trade, well, just grab your Fibonacci expansion tool this time and go from the start of wave 3 to the top and then back down to where wave 4, and then we'll just zoom out and we're looking at this first Fibonacci expansion area 61.8. Look at getting out or moving our stop loss to break even. So worst case should be at break even, and then running it to this level up here would be my first guess. Zooming out, we're probably looking at those levels to be somewhere around up here as well. The next trade we're going to look at is the USDCAD. So here we currently have the USDCAD and we're looking at an entry. Here we saw this time a lower low in price with our higher AO on the daily time frame, giving us an indicator that it possibly could be moving back higher. Dropping down to the 4-hour chart, we don't really have clear AO divergence again on this time frame, but we do have divergence within a hump. And on the 1-hour chart, we have our divergence with our lower low in price and our high AO. Clear divergence because it's above the line right about this point here. We then want to see the push higher and come back and retest this 200 EMA support level. Where do we think it should go? Well, we look for the first large AO and we take the point from the start to the end. So roughly the end is when it comes back below the line, we'll look for the lowest point, and then we come back to the front and we look for that point there. pulled back to at least 38.2, and it did, the 50% mark, and then it pushed back higher. I entered this position here myself around here, had my stop losses down here of around 120 pips, trying to move to break even at these highs, and then pushing it all the way out up to these levels up here, risking probably about 1 to make 2.5 times my risk to reward, risking $100 to make at least 250. Unfortunately, I was stopped out overnight with the poor US news, and as you can see, it's just stepped back down. But if you didn't have the conservative stop loss like I did, and you had your stop losses down at these levels here, you definitely would still be in the trade. So it's still a valid trade if you've got a larger stop loss, and you'd be riding up to these levels to probably risk something like 200 to 300, 1 to 1.5 risk to reward. So it all depends on how much you wish. Just remember, am I disappointed about this trade? No, I'm not, because the probability of these rules working is high, and because I always take around 2 to 1 or more, I don't have to worry about winning 50% of the time. I can win 40% of the time and still make money. However, will I take this trade moving forward? Probably not. With all my back testing on USDCAD and now some significant forward testing, the probability on this pair alone is not good. So I'd probably exclude this and continue with my other pairs, such as the Aussie USD, Pound USD, Euro Aussie, and so forth. USO USD was a trade setup we're looking at and currently still in. We're trying to sell the oil trade. Now, oil has been pretty good for us over the past year. So as we can see, we at this point here had our higher high in price and our lower AO. So this is our first point to let us know to get into the market. We watch it step down and then step back up, and then we drop down to the 1 hour chart, and we saw this higher high here and some lower low divergence within the hump. So it wasn't clear, but within the hump. We then look for its down and its pullback, looking for a selling opportunity, risking something like at least 100 to probably 200 pips, and it's come down to here. Not enough for me to want to consider getting out, so I'm currently still in this trade, sitting close to about break even, but I've tightened my stop losses, so I've brought my stop losses right down to these levels about here, just so if anything, these highs were to be broken, I'll stop out for half my loss, because I've just been in the trade for so long. But the good thing about being in this trade, short on the oil, is that it's a positive swap fee. So for every week I'm in the trade, I'm making good money. So if I was to stay in this trade for probably a month to 2 months, I'd easily make my money back, even if it stopped at the full stop loss. So that's one good thing about being short in this trade. It doesn't worry me being in for a very long time because it's a positive swap and costs me nothing to stay there. Now, looking at some pattern recognition using the software provided by our affiliated partner, here's a setup that looks like occurring on the Aussie USD daily time frame. So this is the Aussie USD, the daily chart. If we use our tool from X to A to B, it's saying we could have a cipher pattern come down to here. So it's definitely a cipher pattern and come all the way up. So roughly looking around an entry around these levels here. So still need it to just push up a tad higher, but this is on a higher time frame. So we're looking at getting in on a cipher pattern there. Where do I think it will come to? Yeah, probably around those levels there. Haven't got any divergence just at this stage. So if we were to see some divergence as it pulls down and push back up, then that would definitely be a good position going short with a cipher pattern on the Aussie USD daily chart. And on the USD Yen 1 hour chart, we also have a pattern occurring. So we go from X to A, A to B. So it's saying a cipher pattern down to C, cipher. So there's definitely another cipher pattern. So this one's on a 1 hour chart, as you can see. So we're looking for just to step up a bit higher to these levels here. Where do we think it'll go if we drop down to the 15-minute chart? We're probably looking at a pullback. Definitely got divergence on the lowest time frame. So hopefully it does push back higher and we get that move all the way back up to these levels where we're looking at taking the trade. So thank you for that. That was week 4 of the Forex market review. Remember, always risk to reward is what you want to follow, and make sure you win more than you lose, and you'll definitely stay in the game a lot longer. Set your stop losses and you take profits before taking any entries, and then stick to the rules that you have agreed to and you follow, because probability can only be on your side if you stick to the rules continuously over time, and make sure they're clear enough that you can stick to them without having any confusion. And the smaller the rules, the better. As you can see, my rules are very simple. Some AI divergence on higher time frames, looking for a bit of a pullback to a 200 EMA on the 1 hour chart, and then an entry for 1 to 2 risk to reward. Very simple rules, very profitable. If you've been following me over the last year or so, you would know that by now. So please, we wish you all the best in success. Take care, seek financial advice, and do well 2017. Bye-bye.